Hey folks, Tony from Kentucky. Welcome to my penny portfolio. Sorry, I'm a little bit under the weather still, but I'm just about better. I want to tell you all about 4 stocks that, according to Zacks, we should be watching before the Bitcoin halving. And as I understand it, the Bitcoin halving, there's been 4 of them since Bitcoin's been around. And apparently, just for an example, say the Bitcoin miners can mine 10 Bitcoin at a time and get paid for doing it, When the halving comes around, which is every 4 years or so, every 4 years, that gets cut in half. So instead of being able to mine 10, that'll get cut in half to 5, which in turn makes Bitcoin, harder to mine, so more people want it. And ever since the last 4, during the halving, the Bitcoin goes up. And according to Zacks, these are 4 stocks that will go up before the halving and during it. So let's check those out right quick. Stocks to watch. Of course, they have NVIDIA on there. It's NVIDIA, ticker NVDA, CME Group, ticker CME, Coinbase Global, ticker Coin, and BlackRock Inc., ticker BLK. Now, NVIDIA Corporation is a major player in the semiconductor industry and was one of the standout success stories of 2023. Though they make the GPUs that go in everything, computers, games, and they're the top dog of it all. Okay, we know that much about there. Now I know about Coinbase, but I'm not too familiar with BlackRock, and I didn't know about CME Group at all. CME Group Incorporated options give the buyer of the call put the right to buy/sell cryptocurrency future contracts at a specific price at some future date. CME offers Bitcoin and either option based on the exchange's cash settled standard and micro Bitcoin and Ethereum future contracts. CME Group's expected earnings growth rate for the current year is 3.1%. The Zacks consensus estimate for current year earnings has improved 1.9% over the last 60 days, and CME presently has a Zacks rank of 3, which is a hold. Now, NVIDIA's Zacks rank is a 1, which is a strong buy. All right, then there's Coinbase Global, ticker Coin. They offer financial infrastructure and technology to support the global cryptocurrency economy. Coin provides a main financial account for consumers in the crypto space, a marketplace with liquidity for institutional crypto asset transactions, and technology and services for developers to build crypto-based applications and accept cryptocurrency securely as payments, which that's cool. Coinbase Global's expected earnings growth rate for the next year is 354%. The Zacks consensus estimate for current year earnings has improved 500% over the last 60 days. Coinbase currently supports a Zacks rank of number 1, which is a strong buy. 500% in 60 days. Wow. BlackRock Inc., ticker BLK, is one of the world's largest investment managers and is publicly owned. BLK was one of the first companies from the traditional market to join the Bitcoin ETF race back in June 2023. BlackRock's expected earnings growth rate for the current year is 5.4%. The Zacks consensus estimate for current year earnings has improved 1% over the last 60 days. BlackRock currently carries a Zacks rank of 3, which is a hold. Now, there's the 4 on here, 2 of them, which is Coinbase and NVIDIA, has a Zacks rank of 1, strong buy, And the CME Group and BlackRock has them down as a rank 3 as a hold. So it's 2 strong buys and a hold. Now, let's go see what Robinhood says about them. We basically know NVIDIA. I've got that in my portfolio, but we'll start with BlackRock. Let's go check BlackRock out. BlackRock right now is $816.59 a share, and it was down 1.23% today, and it's basically breaking even after hours. Trading sideways. Let's go look at the 20 analyst ratings has it as an 80% buy, 20% hold, and 0% sell. Zacks has this one as a hold. Robinhood has it as a buy, 20 analyst ratings. Let's see what the bulls say about it from Morningstar. BlackRock's well-diversified product mix makes it fairly agnostic to shifts among asset classes and investment strategies, limiting the impact that market swings or withdrawals from individual asset classes or investment styles can have on its AUM. Product diversity and a heavier concentration in the institutional channel have traditionally provided BlackRock with a much more stable set of assets than its peers. BlackRock is the largest asset manager in the world with over $10 trillion in AUM at the end of December 2023 and clients in more than 100 countries. Wow, dude. Over 10 trillion in assets. Jeez Louise. The bears say, while actively managed funds account for 26% of total AUM, they generate 45% of base management fees, increasing the pressure on BlackRock to get the performance of its active equity and fixed income offerings on a more consistent footing. Despite accounting for 56% of the total AUM, direct institutional client arrangements generate 32% of BlackRock's base management fees, given the lower fee structure attached to these larger investment mandates. The sheer size and scale of BlackRock's operations could end up being the biggest impediment to the firm's long-term growth. I don't know. Who knows? Morningstar rating, 3 stars out of 5. Has a wide economic moat, which is good. Morningstar has a fair value of $830 a share, which is at $816.59, so it's a little undervalued. Uncertainty's high and stewardship's exemplary. Sounds like a good one, don't it? Let's check out CME Group. They were up 1.31% today, $214.50 a share right now, and 19 analysts has it as a 47% buy. This is another one that Zacks had as a hold. Bulls say CME stands to be a beneficiary of rising rates as increased volatility drives more trading volume in its interest rate future contracts. CME has been able to drive trading volume growth by successfully introducing new future contracts like the Micro E-mini S&P 500 and the SOFR futures. CME has assembled a diverse set of derivative products in interest rates, equities, commodities, metals, and foreign currencies. Weakness in one product is often offset by strength in another. Well, that sounds good. Let's see what the bears say. The cash fixed income and foreign exchange trading business CME acquired during its purchase of NEX have seen stagnant to declining revenue. The structure of the clearinghouse industry has been criticized in the past, and regulatory changes could disrupt CME's business model. Unlike its peers, CME is still mostly a transactional business, leaving its results more exposed to market forces. Well, Morningstar rating, 3 out of 5 stars, economic moat wide, fair value $225 per share, and it's at $214.50, so it's a little bit undervalued. Uncertainty is medium and stewardship exemplary. So that's 2 that Zach has as a hold and Robinhood analyst has it as a buy. I'd like to put some money, a little bit of money into BlackRock and CME Group. For some reason, I'm just not interested in Coinbase. I don't know why, I'm just not. And I already own NVIDIA. If I could, I'd put a little, I'd put some more, I'd put money in those two. And I'd put some more in MicroStrategy, Super Microconductors, and NVIDIA for right now. And yes, I'm down 1.62% today, which breaks my heart. I sold Donald Trump stock because it was going down like crazy, and I was still up $5. I was like, I'm about to make me $5 at least. I sold that, and I bought a share of DXYZ, which I will tell you about in another video, and I think it's pretty daggone cool. And the $20 that's left over, I just put it into Bitcoin at $69,000, and now it's down to 65.7. My luck, right? Anyway, folks, I just want to let y'all know about that. So, until next time, take care of yourselves and each other.